Governor Reserve Bank of India, to deliver his keynote address, Driving Inclusive and Sustainable Growth through Digital Public Infrastructure and Fintech. Sir.
Dear Chris, all the delegates of this fest, from the banking industry to the financial sector to the Fintech industry of the country, media, a very good afternoon to all of you. I am indeed very happy to be present in this global festival, the 6th edition. Thank you very much. It's a premier forum where the wizards of technology on the one hand and the experts of the finance on the other hand intersect. It's also a unique forum where the young innovators of the tech, brimming with their bold ideas, converge with the steady wisdom of the experienced leaders. This event reflects India's ambition to remain at the cutting edge of digital innovation. Over the years, this fest has gained from strength to strength. I congratulate the organizers. RBI has played a small role in this huge achievement. RBI is certainly, behind this event and other such events and behind the whole of not only the banking and the related industry, but even the fintech industry. In my remarks today, I wish to reflect on, first of all, the fintech and the DPI journey so far, the next phase of deepening and widening inclusion and sustainability, and the way ahead for fintechs to translate these opportunities into tangible outcomes. The DPI underpins India's digital transformation over the last decade or so. It rests on 3 layers, as all of you are aware. Each layer has been playing a very critical role in addressing the barriers to inclusion and enabling innovation at scale. One, the identity layer, anchored by Aadhaar, with more than 1.4 billion enrollments, has made it possible to authenticate identity instantly. It has enabled millions, 560 million, to open bank accounts and participate in the formal financial system through the electronic KYC. It is the core of DBT for government benefits. 2, the payments layer, which translates identity into action, into transactions. The AEPS, Aadhaar-enabled payment system, has enabled banking through micro ATMs to the remotest corners of our country, through the business correspondents, through the bank sakhis and so on. And the UPI, another element of the second layer, the payments layer, which has allowed close to 490 million unique users, making 20 billion transactions, more than 500 million transactions every day, or almost half of the global real-time payments volumes. And the third layer, again, very important data layer, which we have today, huge, humongous amount of data that is available in this country, thanks to the efforts of everyone. And I was in the government, earlier, all government departments, the kind of digitalization that has happened since the time, I joined the government way back, in 1990, 1991, the kind of digitalization efforts that have happened, whether it is health, whether it is land records, whether it is taxation systems, social welfare, I was in the revenue department earlier before this assignment. The kind of systems that we have built now, and the data that is leveraged by these IT systems, it takes few minutes. What used to take months to file your IT returns, collecting all the data, now that data is available at the click of a button, and within a few minutes one is able to file returns because of this availability of data. The returns get processed, on average in 10 days. And refunds, many of the refunds happen, within 24 hours. This is the strength of data which has become available. Similarly, GST. The GST today is actually driving and has been enabled and has been made possible because of IT. If IT had not been there, the GST that we have today, which is unique in the world, because being a federal country, 28 states, 7 UTs, and the center, different legislations, different legislatures, but still word by word, the laws are the same other than the difference in the name of the act, the state, but enabled by one unifying backbone, which is the GSTN, enabling the transmission of purchases and sales in one state to another. So this data layer, again, because of the digitalization efforts of all people in government, outside government, DigiLocker, again, initiative, of the government, has enabled us to share documents securely in these digital forms. Complementing these layers of the DPI, we have the vibrant fintech ecosystem, which we see over here present today. The foundation of DPI has allowed these fintechs to set up quickly and to scale rapidly and deliver targeted solutions to not only address current but also future challenges. Today, India is home to 10,000 plus fintechs, more than 40 billion US dollars of investments over the last decade, phenomenal growth in this sector, and the future potential, again, is underpinned by several strengths that this sector has. One and foremost is the large and the deep pool of skilled technology talent that we have in our country. Second, a very vibrant financial ecosystem spanning payments, lending, insurance, pensions, wealth management, which is supporting this fintech innovation. And three, enabling policies of the government and the regulatory frameworks which are facilitating the fintechs. The Reserve Bank has been continuously engaging with the fintech ecosystem. We have been proactive, as is borne out by some 500 interactions, more than one a day, which we did last year. In addition, through structured platforms like Finteract and FinInquiry, we regularly interact with the innovators and entrepreneurs. This demonstrates our commitment, our belief in the fintech industry. Some 15 structured sessions with more than 1,100 fintech representatives under Finteract since it was initiated in March 2024, and more than 14 open interactions with more than 600 participants under FinInquiry have been held. We also have now a repository, a fintech repository, to collect key information on activities, products, and technologies aimed at enabling informed policy measures for the fintechs. Recognizing the diversity of fintech sector, we have kept them outside the regulatory space today, but at the same time, we have recognized an SRO which will enable the fintechs to adopt baseline governance standards and best practices which are developed by themselves alone and which are not thrust through some regulation by us. We will continue this facilitation to the Fintech so that they are able to make use of this DPI and the financial ecosystem for the collective benefit of the economy. This synergy between public rails and private innovation is one of the important reasons for India's success in several areas, including digitalization of payments. Over the past decade, India has shown how technology, thoughtfully designed and implemented at scale, can be a force multiplier for sustainable economic development. The fintech industry too has made it possible to deliver financial services at population scale and at affordable costs. The first phase of India's digital journey was about building the foundation and expanding the access to various financial services, savings, insurance, investments. The next phase now is about universalizing it, about deepening the impact, widening the impact by using data responsibly. I will talk about 5 areas. Some work has been done by us in these areas. More needs to be done. These are: 1, aggregation and leveraging the financial data; 2, the digital rupee on which we are working; asset tokenization, in which we have made some initial steps; artificial intelligence, which holds the future for all of us; and digital frauds, which is increasingly becoming a problem for us. First, we need to develop the digital public infrastructure for data integration, as I mentioned, huge data that we have, to widen and deepen financial inclusion. The account aggregator framework is one such endeavor. It is empowering individuals to share their financial data safely with regulated entities. Of course, a long journey, 17 account aggregators today, 650 financial information users, 150 FIPs, information providers, 160 million accounts being served, 3.66 billion requests from FIUs, so a huge lot of progress in this. More importantly, government data like GST and data is also now to some extent available. RBI is in the process of introducing standards designed to improve customer onboarding processes, enhance user interfaces, strengthen data security, and increase transparency and awareness in consent management and data sharing under the account aggregator framework. The account aggregator framework can help unleash the potential in this area by making available data from the providers to the users. However, its success will depend on 2 critical things, and I was discussing this with my team and others earlier, which is: 1, integrating with more financial information, especially information which is vital for assessing the financial status of an individual; and B, interoperability across account aggregators, because otherwise it becomes very difficult for FIPs and FIUs to integrate with each one of them to get the benefits, to get the network benefits. The second piece in this is the ULI, which again, is a landmark step in data aggregation, which RBI is building, because credit is the lifeblood of inclusive growth. And despite best efforts by government and the RBI and the banking system, and while, huge progress has been made in delivery of credit, there is still huge unmet demand, and ULI can certainly be a bridge in meeting this need. Since its launch, UPI has now expanded to 120 data sources and services, 58 lenders, 3.2 million loans have been sanctioned, amounting to 1.7 trillion rupees. ULI again aims to enable use of data for lenders to build alternative credit models, helping expand credit to the new credit segments lacking credit history. So this is again an area which we'll continuously focus on so as to be able to get this important data for use by the various financial users, including the banks, NBFCs and others, to help us further widen and deepen financial inclusion. The second initiative that I'm talking about is CBDC, the Digital Rupee, which represents a critical new rail in the DPI architecture. Since its launch in December 2022, the retail e-rupee pilot today has 19 banks and 7 million users, enabling person-to-person as well as person-to-merchant transactions using the e-rupee. Interoperability of the e-rupee with the UPI is enabling wider adoption without compromising on user convenience. Programmability features in the e-rupee are unlocking new paradigms in purpose-driven direct benefit transfers, subsidies, and targeted lending. These features have been leveraged, as you would be aware, by many state governments, demonstrating the potential for making subsidy delivery and DBT more effective. For instance, Gujarat's G-Safal scheme uses programmable CBDC to provide livelihood assistance, allowing beneficiaries to spend subsidies only on the whitelisted agri-inputs within a geo-fenced area. Similarly, Andhra Pradesh's DPAM 2.0 scheme provides LPG subsidies through the programmable CBDC, which is redeemed on delivery of gas cylinders to registered gas agencies. This is again an area which has huge potential and we'll continue to further develop it. Third, which is a new area, which is asset tokenization. It offers new possibilities for Indian financial markets in expanding access, improving transparency, and enhancing settlement efficiency through smart contracts. I'm happy to announce that the Reserve Bank has conceptualized a unified markets interface as a new next generation financial market infrastructure. This interface will have the capability to tokenize financial assets and settlements using wholesale CBDC. Early efforts and results from the inaugural pilot in improving market efficiency here are encouraging. Fourth, AI. This holds the potential to fundamentally enhance the next generation of DPI in two complementary ways. A, integrating AI into existing DPI layers, user experience and efficiency can be significantly improved. For example, conversational payments can simplify transactions for users with low digital literacy and bring millions with low digital literacy into the formal economy. B, AI itself can be deployed as a public goods infrastructure. The report of the Free AI Committee constituted by RBI has also highlighted the importance of building foundational public goods for AI in finance, including a standardized financial sector data infrastructure, compute resources, and the development of indigenous AI models tailored to the needs of the financial system. Fifth and lastly, the rapid expansion of digital finance has created new challenges such as digital frauds and cyber threats. The Reserve Bank has, as you are aware, instituted a number of initiatives for customer protection, such as the two-factor authentication. Recently, we issued some guidelines, principle-based factor authorization, tokenization of card on file, which was issued earlier, and providing customers with the control to switch off transactions to secure the digital transactions. The recently announced principle-based framework on authentication of digital transactions, I'm sure this will further provide a big impetus to enhancing consumer convenience while strengthening trust in digital transactions. We also came up with exclusive internet domains, the bank.in for banks and fin.in for the financial institutions, similarly the 1400 designated series for promotional communications by the regulated REs and the 1600 series for transactional and service calls. I urge all the banks and the financial sector participants over here to kindly use these to promote safe financial transactions. Mule Hunter is another initiative that we have taken, and you are aware of it. A lot of progress has been made in this regard, huge success, about 90% success in this, which is a big proportion. And we already have 21 banks which are leading this initiative. Similarly, work is now underway for development of the digital payments intelligence platform, which will leverage latest technologies to provide shared intelligence for fraud detection and prevention in near or real time. However, we all, regulated entities, regulators, as well as consumers, we need to redouble our efforts to keep our IT systems safe, secure, and fraud-proof. To conclude, we stand today at an important juncture in the digital finance journey. The past decade has demonstrated how technology can expand access and empower businesses. The next phase must build on this foundation while keeping trust and stability at its central theme. Fintechs can be the architects who design and construct digital highways, and also the products and services on this digital highway that generate social and economic value. I would like to leave 5 thoughts for the fintech industry to consider. 1, build for inclusion. While there may be higher profits to be made by deepening access to the haves and the privileged, prioritize building systems to expand financial services to the unaccessed, the unreached, and the unserved segments of society. 2, adopt a customer-first approach. As Steve Jobs said, get closer than ever to your customers, so close that you tell them what they need well before they realize it themselves. Design products and services that are easy to use, accessible for all, with assistive technologies, ensuring that the vulnerable groups, such as the senior citizens, individuals with limited digital literacy, and the specially abled are not left behind. As I have said at other fora, strive to design services so well that there is no need for customer service in the first place. 3rd, innovate in credit delivery. These 3 layers of DPI that we have, let's leverage them. Extend the success of digital payments, which we have now through the AEPS and the UPI, to credit delivery, especially to small businesses and individuals. 4, prioritize trust and compliance. Embed strong data protection, transparency, and safeguards for consumers into every product and service. And 5, think global while you anchor local. Engage with international partners, share learnings, adopt global best practices, and strengthen India's role in shaping the future of digital finance. By embracing these principles and building on India's unique strengths of DPI, a vibrant ecosystem, a digitally connected population, enabling policies, and a very deep tech talent, Fintech can bridge digital divides, foster healthy competition, and drive innovation. In doing so, the fintechs will not only secure their own growth and prosperity, but also play a very vital and pivotal role in driving the growth and progress of our country and contributing to the vision of Bharat, Viksit Bharat 2047. In this hall, huge hall, we have people with both the foresight and the capability to act. Let us harness this opportunity and together shape a shared future of inclusive, sustainable, and innovation-driven growth. Thank you. Jai Hind.
Thank you. Thank you very much, sir. In fact, your insights reflect not just the deep economic wisdom, but also a clarity of vision that India so critically needs at this pivotal moment in our financial journey. Can we have a huge round of applause one more time, ladies and gentlemen, to thank the Honorable Governor of Reserve Bank of India, Shri Sanjay Malhotra ji. Thank you so much again, sir. With that, we will also be requesting for your presence. As we move forward now to the launches, I'd like to also thank Mr. Chris Gopalkrishnan for joining us. And this is where I'd like to bring to your attention, ladies and gentlemen, that this segment is about to get even more exciting as we all get to witness some exciting launches coming your way. And for this, I'd like to please invite on stage the Chief General Manager, Fintech, RBI, Shri Suvendupati, on the stage. So let's put our hands together and let's gear up for the CBDC launches coming your way right here, right now.
Respected Governor, and good evening, everyone. Now we come to the much awaited segment of this address, which has been a feature of the Global Fintech Festival every year. And this time around, from the Fintech department side, we have two product announcements or launches, so to say. The first one I will, sir, talk about is the CBDC retail-related central bank digital currency retail pilot we started 2.5 years back. And over a period, we have progressed a lot and finalized the technical architecture, changed the course, and it's continued to evolve. And all along during our interactions, the fintechs and fintech sector players, they have been seeking access to the CBDC architecture to able to innovate on top of it. But till date, all the fintechs, they were not able to access the CBDC-related APIs, application programming interfaces, without entering into a formal agreement with the piloting banks. Through CBDC Sandbox, we are committed to enabling that access. It could not have been a more opportune moment than this Global Fintech Festival to launch the CBDC Retail Sandbox. We are sure the sandbox will go a long way in enabling fintechs to experiment, test, and build innovative solutions and add significant value to the ongoing CBDC pilots. Now I call upon Governor, sir, to launch this CBDC sandbox. There is a clicker.
Great financial ideas take wings when they can be tested well before rollout. Introducing the CBDC Sandbox, trusted environment to build the future of money. The sandbox will open up opportunities for fintech sector to ideate and test in near real simulated environment on multiple use cases related to CBDC. Get access to the technical specifications, experiment and validate your propositions. Join directly as a fintech or plug in via partner banks whichever fits your go-to market. CBDC Sandbox will speed up development, reduce operational risk, and spur innovation. Your digital currency experiments belong here. Step into the CBDC Sandbox and build the future of money.
Thank you, sir. The next launch is related to what sir has already spoken in his speech, tokenization of the certificate of deposits. Across the globe, central banks and financial institutions are exploring asset tokenization and unified ledgers as a transformative innovation for the next generation financial system. Today, RBI takes a significant step forward with asset tokenization and unified ledgers, starting with the tokenization of the certificate of deposits and settling them with the wholesale CBDC through a next generation financial markets interface, the UMI. The platform also has an inbuilt sandbox for the banks, non-banks, and fintechs to experiment and innovate to improve the efficiency of the existing systems on the one hand, and to identify new and potential markets on the other. Now I call upon Governor Sir to inaugurate the pilot of the tokenization of the certificate of deposits settled through the wholesale CBDCs on the platform. Governor Sir.
Over decades, financial markets have evolved from physical assets to dematerialized assets. And now, the tokenized assets start a new chapter in financial innovation. Today, the Reserve Bank of India launches tokenized certificate of deposit (CD), which are issued directly as digital tokens, stored securely in a self-custody wallet, traded instantly between financial institutions, and settled seamlessly in tokenized wholesale central bank digital currencies, all by bringing multiple ledgers together as one unified system built on a blockchain.
Unlike earlier digital assets, every token is programmable and independently verifiable across the ecosystem.
No reconciliation, no intermediary layers, and enhanced operational efficiency. This is achieved through the Reserve Bank of India's new initiative, the Unified Markets Interface (UMI), with capabilities to tokenize any asset, unify various ledgers, and with an inbuilt tokenization sandbox to develop innovative solutions. Benefits are significant, with banks gaining efficiency, fintechs getting an opportunity to innovate, regulators acquiring real-time market information, and investors enjoying more flexible access, making our platform India's next-generation financial market infrastructure, built with cutting-edge emerging technologies. India is not just digitizing assets, but transforming the future of finance.
On this moment, I would like to recognize the contributions made by the National Payments Corporation in enabling both these features. And I would like to invite Executive Director Shri R.S. Ratho